Thanks for that. I think it's actually a really interesting one. At the moment, we're seeing a big differentiation between actually the UK market, for example, and the US. So in the UK, we've already seen a correction of around 18 or so percent, and we think there's maybe another few percent to go. But we've already seen in recent data that things have started to improve. In the US, though, we've seen only around 7.5% so far. If we think about the kind of broader picture for all commercial property. And we still think there's a much larger fall to come in the US still, probably on a par actually with the UK. So a total of around 22% peak to trough.
So there's so much to unpack there. Again, the intelligent question would be to ask you where in CRE. In fact, why don't I start off on that? Where in CRE appears the worst still, and where's the best? Because, of course, we look at commercial real estate and we think, oh, prime office, Manhattan. We think of the City of London, Canary Wharf. But the fact of the matter is as well, we know that a vast amount of funds went into warehousing. They went into logistics facilities and what have you. And a lot of that hasn't quite turned out to be the gold mine they expected.
Yeah, so the kind of idea of prime Manhattan has definitely flipped on its head in the last few years because of remote work. So the sector we expect to be worst hit is the office sector. So in the US, we're talking about a peak to trough fall of around 30% for offices. And yeah, that's a national story. So if we break it down into different cities, then there's obviously going to be a range around that. So the worst hit cities, we're predicting around a 50% fall. San Francisco is the one that stands out the most in that respect.
Kiran,
in terms of the other sectors you mentioned, there has been a big run up in values in both multifamily and industrial, and we are expecting them to see around a 20% fall in values over the next year or so. But actually, we think the medium to longer term fundamentals for those sectors are still pretty good. There's this continued move to online shopping, and in the US in particular, there is a shortage of housing accommodation, so we're expecting to see rents for multifamily product continue to rise after a bit of weakness this year.
Kiran, I want to get into that office market a little bit more. You call it a day of reckoning that's coming, which is very strong language, talking about falling rents, rising vacancies. We've been pondering some of the big themes of this settling into a hybrid structure that we've seen now in the workforce, as many workers still have a fairly dominant role at this point given the tight labour market. But other big themes seem to be also evident around AI, generative AI, whether companies are now taking a step back and saying, do I need the level of workers that I've had previously? And in that case, if they make a decision that there should be permanent reductions, that means, again, we see another hit potentially to the amount of office space required. Just walk us through where we're at and what's coming as we weigh up these big themes.
Yeah, so I think in general, we're seeing a much lower physical utilization of office space. So there's data from a company called Castle Systems that records keycard swipes in office buildings in the US, and the national figure they provide at the moment is at around 50% of 2019 levels. So the amount of physical utilization is much lower than it was before. And also that measures swipes. It doesn't actually tell you that people are spending the whole day in the office. And actually other kind of more anecdotal evidence suggests that the amount of people in the office in the US is much lower than that still. It's not quite as bad in the UK and Europe. Again, anecdotally, people talk about coming from the US to Europe and UK, and they're surprised at the number of people in the office. So there's definitely a differentiation there. But in terms of the broader story, in the US, it's a pretty negative one. So what's happening at the moment on the back of that is that firms are reducing their space essentially. So either their lease expires and then they downsize to a smaller space, or while they still have a lease in place, they put that space on the sublease market and then make it available for other firms to take. And the amount of sublease availability has grown rapidly in the last few years, and it now accounts for around a quarter of all availability of office space.